So, just gonna do a quick recap basically. So, I just took this trade on Euro USD. I'm not gonna show GU because I obviously only used the second pair, the correlated pair, to look for SMT and all that. But there wasn't SMT. I guess you can kind of say that there was a cracking correlation because um, this low over here got swept while GU left equal lows, and then this low over here, this one here, that one also got swept, and then GU left equal lows. So I guess you can say technically there are two SMTs, but it was a cracking correlation, but I wouldn't really say that it was um, SMT because it wasn't really a failure swing, even though I do consider equal highs or equal lows failure swings as well. But anyway, just to get into the basis on the basicness of this trade. So it's currently 4:30 a.m. in the morning. I was literally just playing PS5 like for hours. I was just playing games, and I figured let me do my pre-chart analysis basically so that I don't need to mark out everything that I need to mark out in the morning. And then in doing that, I actually caught a trade. So what I saw was, let me just zoom in further. I don't have a screen recorder, by the way. That's why I'm just using my phone because I'm broke, and that's why we trade, right? Okay, so as you can see, um the 4-hour candle opened at 11 a.m. on Sunday, which is it's Monday today. So the 4-hour candle opened at 11 a.m. on Sunday when the market opened, and you can see it opened over here. This dash line is 4-hour open. You can see it drop down. And where did it drop down into? It dropped down into this 4-hour bullish fair value gap, and you can also see that it swept its previous candle's low, and then it closed back into the range. This is known as CRT, right? So if it sweeps the low and closes back into the range, it's a bullish CRT. So if it was a bearish CRT, it would then sweep the high of the previous candle and then close back into its range, and then you would then look for confluences to short, right? So in this case, price opened up, market opened up on Monday, and also obviously opened up in a new 4-hour candle, and then price opened up bearish first because obviously it's open high low close. And if you want to be bullish, you want to see price open low and then high and then close. So price opened, and then it dropped down into this 4-hour bullish FEG over here, and then obviously you can see that price also swept its previous candle's low, so it had a bullish 1-hour CRT, and it was delivering from a bullish 4-hour FEG. So it's basically a CRT located in internal liquidity, because obviously you get internal liquidity, which is FEGs, and then you get external liquidity, which is any form of swing high or low. So you can see that price was delivering from this higher time frame internal liquidity, and in doing so it put in a framework for us, which is CRT. That is the framework. And going down to the 1-hour, right, you can see that okay, so it didn't actually show on here, but on the 1-hour, it did show on here. Technically this swept it, so let me check, let me double check. The 1-hour, I'm looking for the 1-hour. Yeah, so yeah, it is. So over here you can see that price at, I'm looking at the wrong thing. Is it this? Bro, what am I looking at right now? No, it's not that. um it was at 3 2 set 1. Okay, yeah, no, so I am looking at the right thing, so I don't need to go on GU. It was visible on Euro USD. Okay, so sorry about that. This is why we journal, so that we can just sort everything out early. When we just finish a trade, it's important to journal immediately after you are done trading, whether it's a loss or win. I would actually say especially after a loss, so you can actually learn where you went wrong. But then again, it's also good after a loss just to actually step away from the charts as well. So I would say make your notes as you go, and then when you come back to the charts at that time, and then you basically have all your notes and all of that sorted out already, so that you don't forget anything that you wrote down or typed regarding the reason why you lost, or regarding the reason why you won, if you had to step off the charts or anything like that after a win, whatever that may be. Okay, so back to the video. We were delivering from internal liquidity, high time frame internal liquidity, which was a 4-hour bullish FEG, and we got a framework which was a 4-hour bullish CRT. And as you can see here, it is supported by a 1-hour bullish CRT as well. And why is that? Because price over here at 2 a.m. price opened here, and then it swept to 1 a.m.'s low. You can really see it, you can barely see it, but it swept it like literally like barely. Not sure if you can see that, but yeah. So it swept previous candles low, and then that obviously supports price higher because we have a 4-hour bullish CRT framework delivering from higher time frame internal liquidity. And then as price is expanding, because you want price to expand in the third candle, which is at 3 a.m., you want price to then obviously have those bullish price action to support it higher. And in this case, obviously, we also had a CRT model within a CRT model. So we had a 4-hour CRT, and then we had a 1-hour CRT. And surprisingly enough, both of these C2 candles, or C3 candles, let me rather say, both of it is at 3 a.m. So you want to see the third candle expand, right? So this is the third candle here. Let me mark it out. That is the third candle there. I'll make it blue. So that is the third candle there. And this third candle at 3 a.m. was 2 a.m.'s C2 bullish framework, and it was 11 a.m. Sunday 11 a.m.'s bullish 4-hour C2's C3 open. Basically, that's what 3 a.m. was. If all of that sounds confusing to you, which I'm sure that it does, you can just literally go watch TTrades videos. It's free on YouTube to watch. You can watch that. I basically use that as a framework. I would actually say that I use it to trade like overall, because it is really good. It is really, really good. I use it in conjunction with what I already know with my strategy, and it's like the win rate is just, it's immaculate. It really is. Okay, so now that we have the framework, we have price delivering from higher time frame internal liquidity, a 4-hour bullish FEG, and then it gives us a framework where we can see that price on the 4 hours swept its previous candles low and closed back into the range. And then also there, to basically support price higher, we saw that we got a CRT model inside of another CRT model, which was this 1 hour CRT, basically bullish CRT. And to view it clearly, you can go down to the 15-minute, which is where I took the trade. So you can see here on the 15-minute, price basically swept the previous candle's low, right? And then a new 3-hour candle, a new 4-hour candle opens at 3 a.m., right? So you can see it opens all the way over here. But obviously, if you trade this, majority of this move was already made. So to catch that early, obviously, you then want to refine it, and this is why it's called a fractal model, because it is actually fractal. You would then want to refine it by obviously looking for that model inside the model. So here you can see that price swept so 2 a.m. basically swept 1 a.m.'s low, and then it gave a 15-minute change in state, and that would normally be my entry. But I entered fairly early, so I entered at 1:45, which is fairly still obviously like not always ideal, because if you're trading a 4-hour candle and anticipate that expansion, you most likely want to trade closer to the opening of the new candle, which is then that expansion candle. So when I entered this trade, there was still an hour and 15 minutes left. But obviously, because I had that model inside the model confirming it, because I had that bullish 1 hour CRT framework or that bullish C2 framework, that is what kind of gave me the essence of taking the trade. So basically took the trade here. And also why I took the trade early was to basically, what's the word I'm looking for? It was to basically accommodate for my risk tolerance. So I normally risk only 10 points, and then I will target a 1.5 or 1 to 2 or more, depending on how the liquidity to target looks. So I took the trade there because it offered me, price offered me, if this C2 obviously holds, if that 4-hour low obviously holds, if we anticipate it to be a long-term swing low followed by a bullish expansion at 3 a.m. once the third candle opens, then you want to put your stop below the swing low. Same as if you were shorting, you want to put it above a swing high. So then I put it there because it gave me a 11-point stop loss. I normally go for 10 points, but 11 was okay in this case, so I went for 11 points. And then as soon as I saw price basically came down, it was bullish for a bit, right? And then it retraced and it came down into that 15-minute bullish FEG, which is this one over here that I'm highlighting now. Price came down into that bullish 15-minute FEG, and you can see like it barely tapped it. Like it did tap it, but like barely. You can't even see it, but it tapped it like barely. And on GU it did tap it, and on GU it tapped it like very clearly. So that is also known as an SMT fill, an SMT fill. But I don't really consider that an SMT fill, because that's when one pair obviously mitigates the FEG and then the other pair doesn't. But in this case, I don't consider it an SMT fill because both pairs technically did fill the FEG, but EU just wasn't as decisive when it folded as GU, which is also fine. It just supports the narrative higher. Yeah, so basically price was bullish for a bit, and then it came down, tapped into that 15-minute bullish FEG, and then I moved my stop loss from 10 points then to 6 points, and then there on out price gave that 15-minute change state of delivery, followed by another bullish 15-minute FEG. So price swept this high to the left over here, and then it retraced, and then after retracement we can obviously expect expansion again. So then it expanded again, and you can also see that price retraced after that C3 candle opened, or when the candle opened at 3 a.m. because when a candle opened and you wanted to be bullish, what you wanted to do, you wanted to open low, high, close. And you can see here that price in the third candle, the C3 at 3 a.m., you can see that it opened low in order to retrace into this 15-minute bullish FEG, and then it obviously expanded. So that is basically the trade. So it's a really good trade. This was a 3.35 risk to reward. Sorry, it's a 3.35 risk to reward after I moved my stop loss to 6 points. But when it was at 11 points, it was basically a 1.8 risk to reward, which is also good considering that it's actually a 2-hour trade, because I risked 10 points in order to gain 20. That's 20 points on top. So when I moved it to 6 points, and then that's when the trade became a 3.3R, and yeah, 20 points was really decent. So yeah, that's basically the trade recap and the video for today. I don't upload as much as I should, because I obviously have other things in life that I have going on and all of that. Maybe in the future, I will upload a bit more and use the channel as it's intended to, which is basically a digital diary, just showing the process of trading, the genuine and the honest and transparent process of trading, and what it's actually like. Not all of my trades look like this. Not all of my trades are like perfect to the T. This just so happens to be like a really good trade, and I decided to use my phone's camera just to record it. So you're going to get people that's going to see the quality of this video, they're going to be like, it's not worth my time. Those are the same people that's going to most likely remain unprofitable, and they're going to keep strategy hopping and blowing accounts and all of that. So if you watch this entire video, then you were already majority. You were already ahead of the majority, to be honest, because most people just don't have the patience to sit through a long video, to be honest, especially if it's a long trading video, because yeah, I know it's a lot. But yeah, this is basically the TTrades Fractal Model in conjunction with my model, which is swing theory, which is a whole nother concept that I am still, I'm still in the process of developing. But so far it is going really good. Few losses, few wins, a lot more wins, obviously. But yeah, that's basically the video for today. You can go back to this trade even if you want to check it out and do the annotations yourself and all of that. It's the 13th of October, Monday. It's during Asia. You can literally just go view it on the higher time frames of when I started the video, so you can see the price action clearly. At the moment it's on the 15-minute time frame. But yeah, if this model specifically obviously isn't for you, you don't need to trade the model. If you feel comfortable trading something else like supply and demand and support and resistance and all of that, if you are comfortable with doing that, if you have a higher win rate with doing that, then do it. I'm just sharing my process of how I trade, my strategy on how I trade, the real transparency of trading, the wins and the losses, the emotions and the psychology and all of that. I'm sharing all of that on the platform because, like I said, I'm using the channel as a digital diary. I'm not necessarily using it for to gain subscribers or to gain likes or anything like that. I'm literally just documenting my journey as I go. And I'm sure there's going to be some people out there that's going to find it interesting and will gain a lot of knowledge from watching the videos. So yeah,